What's going on, guys? Welcome back to another video. Thanks so much for tuning to Stock Essentials. My name is Alex, and we're going to be going over a really nice option and strategy to make some nice, consistent, as well as profitable income using options. Very high win rate on this strategy. And we're going to be using Amazon stock as an example on this strategy. So our goal is to make around 1% per week. And 52 weeks in a year, that's going to be 52% every single year, assuming you're not reinvesting your gains. But with reinvestment, it's going to be a lot higher than that, of course. So Amazon, it's at a pretty nice price point right now after its sell-off from earnings, and we're going to be going into a really nice option strategy. But before we get started, take a look at the link in our description for our premium Discord server. We have buy and sell signals from a ton of analysts. As you can see here, a lot of people are making money. This guy made around $810 off of our SPCE calls, as well as this guy making $115 off of the same calls. So a lot of people are making their money back in just one day. So check that out. Link in the description below. But we're gonna get back to Amazon stock. It's at a pretty nice sell-off, and I think that overall it's pretty flat. So it's going to be a nice opportunity to sell some put credit spreads, because that is going to be a nice strategy when the stock is flat or just oversold. So we take a look at the technical analysis. We can see that Amazon stock is at the lower end of the Bollinger Band, so it's at a pretty low level, as well as the RSI showing that it's a little bit oversold because it's under 50, sitting at a nice 32. So right now, I do think that for the short term, it's going to either remain flat or have a little small rise up. So let's head into the options chain and see what's up. For this strategy, we could either do August 13th, which expires in this week, in 4 days, or we could do an August 20th expiration. For this strategy, it's just an example. We're going to do the August 13th expiration date, and since the premiums are a little bit higher, we can safely go down to strike prices. Something like a 3270 strike, we can sell that put and then buy the one under it, the 3260. As we can see, we're going to receive a total credit of $108. That's a little over 1% return on your capital, because you are going to need $1,000 of collateral. So it is going to be a little bit more than 1%. Let's take a look at what it actually is. 1,000 minus 108, 892. 108 credit divided by 892. That's a 12%. No, it's a 1.2% return in just 1 week, less than a week. So pretty good put credit spread here right now. And it does need a significant movement downwards in order to lose money. As long as it stays above 3270, which is at a pretty unreasonable price point that I think Amazon will be at. As we can see, it's pretty oversold. It's been beaten pretty down lately. I think that it's due for a rebound, or it's going to remain flat as it is the past couple of days. So this is a really nice put credit spread example that we're going to be highlighting, and something that you should consider opening if you're neutral or at least bullish on Amazon. Huge tech giant. A great company. Overall, they have a monopoly in many different sectors. So really good put credit spread right here. And if you do it every single week, you're gonna make 1%, 1.2%. For this example, we're just gonna do 1%. If we go to the compound interest calculator, initial balance, if we start with say $1,000, interest rate 1% per week, compounded weekly, and if we calculate it for 1 year, we're going to see some really nice returns. As we can see, we're going to grow $1,000 into $1,677, which is a 67% return. Absolutely amazing return, and it's a great way for people, especially people with small accounts, to grow their accounts. So for example, if we go maybe 2 years doing this strategy, yeah, same APY, annual rate 67%, but our investment is going to grow to $2,800. So it's going to be pretty nice. A compound interest is definitely a really strong tool, and the goal with playing options, and especially this channel, we want to play safe option strategies. We don't want to be buying weekly out of the money calls, puts. That's pretty risky. You're most likely going to lose your money. But actually selling options, whether it be covered calls, cash secured puts, or put credit spreads, call credit spreads, iron condors, these are strategies, advanced strategies that we want to be utilizing to make some consistent, profitable income and grow our accounts to large amounts over time. That's the best way to play it. We don't want to get greedy. We're not trying to look to get rich quick. As we can see here, $180 per week on $1,000 of collateral. That's a really great return in my opinion. So comment down below, let me know what your thoughts are on this strategy, and of course subscribe if you're new to the channel. It helps out a lot. We make daily videos on stocks and options.